Hi, I'm Scott McAuliffe. I'm a partner that leads Kiter's Risk Advisory Services practice. For those of you that are not familiar with our risk advisory practice, we provide a wide range of services from internal audit outsourcing, co-sourcing, internal control reviews for smaller organizations. We provide IT audit and consulting services for public companies. We do Sarbanes-Oxley assistance in helping management with their assessment of internal controls over financial reporting. We also provide SOC exams, which are, if you're not familiar with that, those are internal control reports of third-party service organizations. And that can either be on the financial side, such as payroll providers or claims administrators or TPAs for for like benefit plans. And then also it could be more on the data security side. So organizations, third-party organizations that maybe are data centers, SaaS as a service type providers. And then lastly, in a growing area of our practice is our cybersecurity practice, where we help companies perform cybersecurity assessments, provide security awareness training, penetration testing, and vulnerability assessments. So we provide a wide range of services, all focused on internal controls, IT controls, and consulting. The agenda of this next 50 minutes is I'm going to go through and talk a little bit about fraud, just a quick overview of fraud, provide some examples of actual frauds that have occurred, just to give you some insight of what's happening when a fraud is occurring. And then move on to talking about internal controls and having a strong, internal control structure. You don't want to just talk about fraud and not talk about how you can mitigate the risk of fraud. And then lastly, I have one slide on performing data analytics, and it doesn't go nearly into the detail of what Subhash just talked about, but these are some things that your organization might be able to do on its own to basically detect if there's some type of fraud occurring within the organization. So starting with the different types of fraud, there's basically three types of occupational fraud that could occur. There's asset misappropriations, which is essentially the stealing of cash or non-cash items from an organization. You have corruption, which is basically using your responsibilities, your influence to influence a business transaction. And then you obviously have the last one being financial reporting, of either inflating or concealing financial information that's reported out to the public. So with asset misappropriation, again, there's both the cash and the non-cash schemes. When thinking of cash, it can just be the straight up stealing of cash, where you're not even trying to conceal that you stole that money, or you have where you actually try to hide the fact that you're taking money from an organization. And you might hear this, the term skimming and kiting. And then you also have the non-cash schemes, which could be the stealing of inventory or supplies or fixed assets from an organization. Then you move on to corruption, and there's the conflicts of interest, which could be purchasing schemes, sales schemes, and this is probably the most frequent one we would come across in small to medium-sized businesses, where individuals are using their influence to maybe hire a related party to perform some services for their organization. But you also have bribery and extortion, and those occur, where you hear about them more really when your organization's working with companies in other parts of the world that might not have as strong of standards that maybe the U.S. has. And then lastly, being again financial reporting, and that can be the basically overstating or understating of revenues or expenses, or trying to conceal information from investors or from the public. So how does fraud occur? If you've ever taken any fraud training or read about fraud, I'm sure you've heard of the fraud triangle, but essentially the theory is that for any type of occupational fraud that occurs, there are these three elements that are present for the individual committing that fraud. And so you have the perceived pressure, which is that individual has a financial need, or in certain cases with the kind of the financial reporting type fraud, they might have the pressures to meet numbers, creating that pressure for them to commit the fraud. Then you have the perceived opportunity, so that individual thinks that they basically have identified a way that they can circumvent controls, or maybe there aren't any controls to have to circumvent, but they have an understanding how the system works and they're able to conceal, I believe they can conceal that fraud that they commit. And then lastly, being the rationalization, where that individual is rationalizing to themselves that it's okay for them to commit that fraud, either through, they need the money, or maybe they don't respect the organization that they are working for, or maybe they don't think the organization needs the amount of money it's making, or they're not paid enough. So they're able to rationalize in their head of, why they should commit this fraud. All right, so we're on to code word number 5. It is 867, and again, just make sure to escape out of the full screen mode so that you can type that number in and get credit for the CPE. All right, so the next slide here is a slide that is taken from the ACFE, which is Association of Certified Fraud Examiners, and they basically issue a report every 2 years where they gather information of all the various frauds that occurred over, I guess, assume over that 2-year period. And then they basically do a lot of analytics to determine, for like in this instance, how fraud is detected. And if you look at this slide, they always have this slide in their report. If you were to go back and look 10 years ago, this slide would pretty much look exactly the same as it looks today, where as you can see there, the largest fraud detection mechanism how it occurs is through tips. And you can see that that's at 43% of all frauds in this survey are detected through a tip. And you can see that's 3 times larger to the next largest item, which is there at internal audit. And then if you kind of scroll down that screen a little bit, you can see where I circled external audit. And the reason I highlight that is because you can see there, it comes in at about, I guess, 4% of all frauds are detected through a company's financial audit. And the reason I highlight that is, I've been doing this for a long time and had lots of conversations with organizations and either talking with an organization that maybe just recently had a fraud, or talking to an organization to see whether they're concerned with a fraud occurring within their organization. And when you have these conversations, I think pretty much every time I have those, one of the things they bring up, or the main reason why they might not be concerned with fraud, is that they have an external audit performed. And while an external audit is a great anti-fraud control to have before your organization, as you can see from the slide, it's not the best way of being able to detect whether a fraud is occurring. And that's really because the financial audits, while it has fraud procedures that are performed during the audit, that's not the main purpose of the audit. The main purpose of the audit is to make sure your financial statements are accurate and fairly presented. And while they do perform fraud procedures, they are not the majority of the procedures are done in other places to basically determine whether your financial statements are accurate. And so I bring that up just to make sure that organizations aren't getting a false sense of, well, we get an audit, and so if there was a fraud occurring, that's going to get identified through our financial audit. In reality, if a fraud's occurring, the biggest way that's going to be uncovered is through a tip. And with tips, there are mechanisms that organizations can implement to enhance the ability to have those tips come through. There are hotlines that organizations can utilize, like third parties that will have 24/7 hotlines that are manned. And those, when you think about someone, if they're going to go and report a fraud, I think a lot of times they want to remain anonymous because they don't want to know that they're reporting a fraud. And so having a manned hotline is probably the best way to be able to garner the information that's needed from the tipster to provide, because they're able to ask questions, maybe be able to get information from that person to basically follow up with them if they need it. And if you have a number or an email box, while those are also very good, it might not lead to, it might be as effective in being able to investigate a fraud, because the information, they don't provide enough information to an organization to follow up on. So again, these are their slides coming from the ACFE report to the nations, and the slide on the left is basically how frauds are again, how they're reported or tips coming through tip line. And you can see there that it's pretty well spread out through having a telephone hotline, having an email, or through a web online form. So they're basically a third of coming through equally through those three mechanisms. And you can kind of tell from the slide that this doesn't add up to 100%. And the reason why this slide and even the previous slide doesn't add up to 100% is that oftentimes when a tip comes through, or there's more than one mechanism that an individual might use. So an individual might call the hotline and also submit an email. So that's why it might inflate the numbers and why they don't add up to 100%. But again, having multiple mechanisms, I guess, is the key to this slide, that providing individuals multiple ways of reporting this information is a good way to make sure that that comes through. And then the slide there on the right just talks about when the information's coming through or the tips coming through, how they're reported. And you can see the biggest way that the tips are coming through is going directly to an individual's direct supervisor, with the next going into internal audit. And then you can see there at the bottom where, again, it goes, I guess at 1% is the external audit. So again, that just kind of shows you that when you're talking about fraud or how it's going to be identified, it's really hard for it to be identified through your financial audit, and it's coming in through these other mechanisms. So these next slide, basically just some trends that, again, come out of that report to the nations. And the slide on the left just talks about anti-fraud controls and what's happening over the last decade and what organizations are doing in this area. And you can see that the things where organizations are doing more around relate to more organizations are implementing hotlines, implementing formal anti-fraud policies, and then really providing some good training to both employees and to managers and executives on fraud and the fraud risks and how to prevent frauds from occurring. And then on the second part of that slide on the left, you can see that it indicates that a third of all frauds, a lack of internal control, was one of the main causes for that fraud to have occurred. So again, it's just important that your organization have good, strong internal controls to hopefully prevent or at least detect when a fraud might occur. With the middle slide, or the middle illustration, you can see is basically a slide to evaluate how fraud might impact small businesses versus larger organizations. And you can see that with billing fraud and payroll fraud, they tend to occur, at least according to this survey, 2 times as likely in small businesses as they occur in larger organizations. And then, but then when you get down to check and payment tampering, you can see that it gets up to four times higher in small business versus larger organizations. And I'd have to make an opinion of why I think that might occur. And just from things that I've seen in small business, small, medium-sized businesses, a lot of times they don't have implemented some of the banking controls that larger organizations might have, such as positive pay and direct debit blocks, maybe utilizing blank checks instead of having check stock that has an organization's address and check number on there. So oftentimes larger organizations will always have those type of controls in place where smaller organizations might not have made that investment in some of those banking type controls. And then if you think about the last part of the slide on the far right, talks about where's fraud occurring in more than half of the areas, and you can see that 15% occur within your operations, 14% in accounting, and then 12 and 11% respectively between management and the sales group. And so you can see that fraud, thinking about fraud, it's not just within your accounting group, it's happening in a bunch of different areas within an organization. So the next slide, just to go through a couple of warning signs of what you might see in a typical environment where fraud occurs. Just to highlight a few of these. One is, I think you'll almost always see that there's trust placed in the employee that's committing fraud, and that's not just trust from maybe the owner or the senior executives, but even with employees they work with. They're usually you hear the story, they're usually a pretty good person. Everybody liked that person, but at the end of the day, that person was performing or committing fraud. The next bullet there of employing having a detailed knowledge of how the systems work, that almost always has to happen. They're going to have an understanding of how the controls are set up, how an individual, what they might be reviewing, what they might not be reviewing, what sort of threshold for reviewing things. And so they have a good understanding of how a system works and where the holes might reside, so that they know how to exploit that information. They also, some of the other ones that I might highlight would be obviously the lack of effective internal controls. Again, if you don't have strong internal controls, fraud could happen pretty easily within the organization. And I think that's probably the biggest items that I think I would see within organizations, and things that often see as trends of when a fraud occurs within an organization. So then if you're looking at the actual individual that's committing the fraud, some things that you might be warning signs that person could be committing fraud. Is that person having financial difficulties? They have personal debt or credit card issues that they might have. And oftentimes, organizations, to help and prevent hiring someone like that, is when they do their background checks to include a credit check with that, which could be a very important detective control before you hire someone, especially someone that might have access to cash within your organization, that you make sure they don't have any issues that are popping out on their background or credit check. Does the person have lifestyle changes? Is the person living beyond the means that you know how much that individual is making, and are they living outside the means that you would think they'd be able to? Sadly, divorce or family problems often can lead to fraud, or maybe that occurs because they are committing fraud and they've kind of gone down a path that they have behavioral changes and things like that lead to some of those family issues. As the person become, their behavior changed, you'll often see that. And again, when I go through some of the examples here in a minute, some of these warning signs will be very prevalent to the individuals that were committing the fraud. And lastly, it's a questionable background. So again, looking at the background checks before individuals you are hiring to make sure there's not anything in their background check that would make you question why you or whether or not you should hire the individual. All right, so these next couple of slides, I wanted to basically go through just to give you some insight of how some frauds occur, because I think a lot of times people think that maybe frauds are not going to happen in their organization, or maybe they're easy to detect because they are of large sums of money, But I have several examples that I wanted to go through just to kind of paint a picture of how different frauds occur. And you can kind of see some trends that over these different frauds of things that are very similar between them. So so this first one is actually I saw this through the Association of Certified Fraud Examiners. They have different webinars and things like that. So if you're ever looking to get some more CPE and you're interested in fraud or want to learn more about it, the ACFE has different webinars, and one of the ones that I really like to listen to, or they have I think they're called like Insights of a Fraudster. And so they'll have individuals that have committed fraud, and they'll basically sit down for an hour or 2 hours and basically ask this person questions of, how they committed the fraud, why they committed the fraud. And they'll really go through the whole fraud triangle to kind of show you, how all those different elements were there and how they were able to exploit the organization for, to steal from them. And so this first one actually is one of the webinars I sat through. And so this individual, he was a controller of the organization, and he stole over $1 million, $1.3 million over a 3.5-year period from this organization. And with his fraud, he when he was just going through and he was being a controller and he's doing his job, he had discovered that, I think he was maybe doing the bank reconciliation or something like that. But when he was going through that process, he discovered that the accounting system would allow an individual to basically create a check, but before paying the check, it allowed them to, or before recording the check in the accounting system, posting it, it would allow the individual to change who the payee was. And so he, recognized that this was an issue this AP system had. And so he contacted the software vendor and said, hey, I noticed that there is an issue here where we were able to change who the payee is on a check before we recorded the system. And that software vendor said, well, it'll take about $3,000 to fix that. And so he gathered up all that information and he went to the owner of the organization. He said, okay, I discovered that the system allows you to do this. And the software vendor said that it will cost us $3,000 to fix. And the organization or the owner was like, well, I don't want to spend that $3,000. And he said, and he went further to say, he's like, well, and what the issue is. So if it happens again, it'll be easy for you to fix it. And so with that, the individual, I think he then became a little bit disenchanted, with the owners. I think he didn't think the owners were maybe completely ethical in all their business dealings. He also had where he wanted to provide for his family and basically provide outside the means that he was able to provide with the salary that he had. And so he began to exploit this issue he found with the system. And again, he did it over a 3.5-year period. And he did all of the checks that he cut to himself essentially were done at under $10,000. So again, not to, at a relatively low threshold, so not to raise eyebrows within the organization. And the only way that this was discovered was as this fraud continued to happen over the years, he indicated he was getting some mental health issues and he was starting to have kind of breakdowns at work. And so he went out sick for like a mental health issue. And because he went out sick, the organization went into his computer to basically download everything to make sure that if he was out for an extended period of time, they were able to continue to process perform his duties. And I guess inside his computer, he had basically outlined all the different checks that he had cut to himself. And so they were able to find that. But again, I think you can see from this that, things that I highlight is that, they were able to do, it's really, relatively low dollar values of all the fraud, all the checks he was cutting to himself. But over time, you're able to do it over a 3.5-year period, and it added up to over $1.3 million. And like I said, even his organization kind of noticed that his lifestyle had changed, and he would basically say that, he had inherited some money from his family. And I think he was a professional, I think he might have been a professional racquetballer. And so he talked about maybe getting some earnings out of that as well. But he was able to basically, I guess, fool individuals in the organization for some of the things that he was doing with that money. The next one, the organization, this controller stole $3.2 million over a 4-year period. So again, I think when you see most frauds are happening, it's not just a one-time thing, but it's things that are happening over a period of time. So in this case, happened over a 4-year period. As you can see, this person transferred, just straight up transferred money out of the company's bank account into his account or to his wife's account. And it was only discovered after the person was terminated for downsizing. And again, they were going to then perform, the next person was going to fill his duties and found that he had stolen all this money. And you can see that in this case, there's a clear lack of internal controls that this organization had, because he was able to transfer this money right out of his account, from the company's account into his bank account. And no one was the wiser to see that. Jennings raised his hand. With the next one, a couple of bookkeeper examples. So here again, you have not as much money. A bookkeeper stole $419,000 over a 3-year period. So again, it's a long period of time. The average check here was $4,000. So again, it was a pretty low threshold of checks that are going out the door. So they're obviously committing or cutting a lot of checks to be able to get up to that $419,000. But again, it wasn't raising eyebrows within the organization because of the dollar value that they were cutting the checks for. And again, it was similar to the first category, or the first one I went through, is they were cutting the check to themselves and then changing how they were posted to reflect an actual vendor of the organization. So not to raise a red flag of why they were paying a vendor. It looked like they were paying a vendor they used, but in actuality, it was going to the individual. And then similar with the second one on there, again, $390,000 in a 3.5-year period. So again, it's a long time. It's the same thing where they were cutting checks themselves, hiding it through looking at actual vendors. Here it was even less. The checks were about $1,000 at most. And so again, it's a low threshold occurring. And then unfortunately on this one, the company went out of business. And then this last one, I just threw in here. In this one, it's a smaller amount of money. It happened, it was $47,000. And this one, I thought I'd throw out there just because it's kind of personal to me. My parents have a family business, and they had an individual that I think they started as a staff accountant or something like that, and worked their way up to be the bookkeeper or controller of my parents' business. And this person was definitely a trusted employee of my family. I can remember as a kid, they would babysit me as my parents would go out, out of town for a week or a weekend. This individual would come and babysit myself and my brothers and sister. And so they were a trusted employee. They're kind of a friend of the family type thing. And I went off to college, and then I started working up in DC, and I was an accountant, and I was hearing things from my parents of yeah, and they're kind of a retail business. They're like, yeah, we got robbed this weekend. They stole all the cash from the weekend deposit, and I got robbed again. They stole it again. And then started hearing like this person that was the trusted employee. They started living outside their lifestyle. They were having some issues with I think she was cheating on her husband, and driving nice cars and things like that. So there's some weird behavior that was occurring with this individual. And then I can remember coming home for Christmas, and my dad's like, "You're an accountant. This person, hasn't done the bank reconciliation in like 6 months. Can you do it while you're home?" I'm like, "Sure, whatever." And so I started doing the bank reconciliation, and I'm like looking at it, and I'm like, taking the deposit slips, and I'm I'm noticing that, the deposit slip says it was made for today, but then on the bank, when you see it, look on the bank statement, maybe it was a week later. And then I'd see another one, and maybe the deposit slip was for, $1,000.53. And then I'd see it on the bank, and it might be $1,000.22. And then I'd see where you had a deposit, and it was never in the bank account. So I went through the 6 months, and I'm like, Dad, there's something really weird going on. I showed him everything that was happening. And so he went to the bank, and he said, I have my deposit slip. Can I see the deposit slips you guys got for some of the ones I showed him that were weird? And they were different. And so what was happening was the individual would either steal the whole deposit, or they like a cash deposit, or they'd steal the cash out of it and then replace it, try as close as they could to the amount with putting checks in there to basically add up to the cash value they stole. And so, end of the day, this person stole $47,000 from my parents. But all the different things you hear about trusted employee. I mean, this person was definitely a trusted person to my parents and to our family. And so it's again just a lesson that I can relate to, because I talked to a lot of people, organizations, and they talk about the trusted employee, and these are just things you have to kind of think about. All right, so I wanted to go through just a couple of different other types of frauds. We got the PPP fraud. Obviously there's been a lot of loans that have been going out over the last couple of years related to PPP, and so there's obviously a lot of fraud that's occurring with these loans. And so this is another webinar I sat through, but just to show that the OIG is doing a lot of investigations on these PPP loans. And so they're doing some data analytics to help them identify where they think fraudulent loans might be. And some of the things they're doing are they're looking at addresses, and they're not just looking at physical address, but they're looking at duplicate email addresses, duplicate IP addresses, to see if there are duplicates out there that shouldn't be out there related to these PPP loans. They're looking at are they getting organizations getting more than they're allowed under the current employee count they have. And then the other one, which I thought was interesting, is they're looking for changes in banking information. So I guess when they submit the application, if you put your bank account on there, and then prior to, I guess, receiving the funds, if you're changing that bank account information, I guess that's an indicator to them that there might be some fraud occurring. And so they're doing a lot of data analytics to help identify this. And it's still, they're still doing a lot of investigations. But as of March of this year, they'd already discovered 23,000, I guess, fraudulent loans and seized over $580 million. So they're going to continue to do all that. And so, there'll definitely be some impacts on organizations that apply for these loans. And then the next area I wanted to go through is cyber fraud. And this is out of a report from Verizon, basically does a data breach report. I think they do it every year. And so I just pulled out a couple of illustrations they had within this study. And, in the first box there on the left is, how do data breaches occur? And, the highest number there is through social engineering. So I think we hear a lot about social engineering and how data breaches occur. And so that in their study, that's how, I guess, close to 35 to 40% are occurring through social engineering type scheme. In that middle box there is their thoughts on how COVID might be impacting fraud and with the remote workforce and hybrid workforces. And what their study shows is that I guess the biggest increases from last year or to this year are related to phishing and to ransomware, where those things are increasing quite a bit compared to last year. And I guess their thought might be is that it's related to again going to this more remote workforce. And then lastly, the last slide or last box there is talking about the different costs to, I think I understand this slide, but I think what it says is it's kind of interesting. They mingled a couple different things in it, but they talk about the costs of the different types of fraud. And so they have the top there's BEC, which is business email business email compromise. And so they're saying there that the cost in this study that either it has a pretty wide, all these have a pretty wide range. It can cost as little as $250 to as high as almost $1 million when this type of fraud occurs. And then you got the next one being data breaches, where those can range from $148 to almost $1.6 million when those occur. In the next two lines you have there are forensics and legal. And what I think these are trying to show you is when you do have a data breach or these other types of breaches that occur, these other types of frauds that occur, from a forensic standpoint, it could cost you between $2,400 and $330,000 in forensics to figure out how it occurred. And then the next one being legal guidance, where it can cost you from almost $1,000 to $53,000. It seems kind of light to me, but in legal costs to get through the issues that you have with a data breach. And then the last bullet there being ransomware, where it can cost you from anywhere $70 to $1.1 million. So you can see there's a lot of costs when these type of cyber frauds occur. And we're on to code word number 6, and that is 178. And then with that, I wanted to have Chris Michello, who leads our cybersecurity services, to kind of talk about ransomware, because we have, again, seeing an increased amount of ransomware occurring within small and medium-sized businesses. And so we thought it would be good to dive into this a little bit, just to give you an idea about ransomware.
Thanks, Scott. Appreciate it. Yes, so ransomware this year is a really big topic, and it seems to be going around a lot more. And one theory for that is because of the PPP loans. We had a meeting with one client recently, and they believe that they were targeted because the amount of money that they received is public, right? The PPP loan information is public, and they received the maximum amount of a PPP loan, and they were targeted for a huge amount of money, for about $3 million. So it is making its rounds. But before we get too far into it, let's do a quick discussion of what is ransomware. Well, at a high level, it's a type of malware that you can get on a computer and can spread over a network. And what it does essentially is put a password between you and your own data. And it does that by encrypting the files on your network. And the password, which is held by the hacker, is essentially the magic key to decode, to decrypt all of those files that have been encrypted. So it's pretty nasty. And one of the things from that one client that we had met with to discuss, one of the things that you have to remember is that it's not just about taking data. Ransomware can take down a network, right? It can take your phone system offline. It can have all sorts of other deleterious effects on your company, aside from just momentary inability to access your own files. So we've got 3 slides here. Ransomware, don't get it, don't spread it, and how to recover from it. So one of the key things I want to emphasize here is, first, we're not going to go over every one of these things in detail, but one of the key things to remember is that security in general is all about layers. There's no one solution that you can implement that will protect your network from cyber attacks or ransomware. It's about layering a number of protections together so that ideally one of those layers will stop the ransomware from getting into your network. So on the don't get it slide, one of the best things that you can do is to have strong email-based protections. And these are technological protections that will scan for malware, block certain file types that are not necessary for your users. And then there's something called advanced threat protection, which is more of a generic term these days, but basically the process where an email server will open a file in kind of like a bomb-proof box away from your network, and it'll observe what the file does. If the file tries to make network requests someplace in Russia, it'll it'll say, oh, maybe this file is bad. Maybe we're not going to release this to the email recipient. These are just some of the different things that you could have at a technical level protecting email. Something else that's critical is patching. Most malware functions by taking advantages of weaknesses in common products like Microsoft Office products, Adobe Acrobat, et cetera. And what those weaknesses generally do is, an attacker could send you a file. The file is malformed, but it's designed so that once it's executed, it would send the application into an error state. So if you receive a malicious Word document, when you open that document, it could send Word into an error state. And once it's in that error state, it's allowed then to execute other malicious code. Another important thing is education, both for the IT teams and for your end users. Most IT folks in organizations are really good at helping the end user deal with, if Excel is misbehaving, or they're having some issue with Word where they can't get their section breaks right or something within a Word document. But making sure the IT team is educated about security is critically important. And then, as one of the things that Scott mentioned was that most of these attacks start in email. Either it's a phishing attack or some type of other email-borne attack. And the reality is that a lot of these, even best-in-class security, will not stop a lot of these attacks. So at some point, your end users will be the first line of defense, and making sure that they have the mental equipment to identify these attacks and the motivation to identify these attacks and report them when they see them is critical. Don't spread it, right? So if you get ransomware on a computer, which, as we know, happens, you can have other security layers which can stop it from spreading through the rest of the network and really taking down an organization. I would not rely on antivirus. Good antivirus can be effective, but it's not, you really shouldn't rely on it alone, right? It's kind of like, leaving the doors to your house unlocked at night because you have a security system, right? You want to do both, right? Which sort of gets us to the next item, which is locking down firewalls. And without getting into the nitty-gritty of what all those terms mean, the basic premise is that your firewalls, which can exist at your network perimeter and on end user computers, as well as within your network, but those are the doors that allow traffic in and out of your servers, and you want to keep as many of those closed as possible. Ransomware spreads on ports throughout your network that generally don't need to be open. So it's a good idea to block all those ports on end user computers and on the firewalls that exist at the network perimeter. Another good thing to do is have blocks on your firewall that block traffic to certain countries. A lot of ransomware is spread in two phases, right? You can get this initial file on your computer, but that file usually has to talk to the internet to download the crypto keys that are going to be used to encrypt the file on, or all the files on your network. And those frequently are downloaded from websites in foreign countries that have been hacked. So you could have, some website that's in some Eastern European country that's been hacked, and now that hacked server is being used to serve up ransomware. Well, you're a Virginia-based business. Do you really need to be talking to web servers in Lithuania? Probably not. So blocking by geolocation as well can be a great security layer to add. And then another thing to add is a web filter, right? So a web filter will inspect web-based traffic. So if you've locked down your other ports, right, more than likely you're going to leave the web ports open because that's what you do every day. You're on the web. So you need those to be open. So how do you protect those? Well, you protect those by using a web filter that's able to inspect that traffic and hopefully block ransomware there. All right, so let's say you get it, right? How do you recover from it? Well, the step one to recovering from it is making sure you maintain good backups. And ultimately, your backups have to be untainted by the attack itself. If the ransomware attack spreads to your backups, you're up a creek without a paddle at that point. And the good backups should be made at a frequency that makes the data recent enough to be useful, right? If you take a backup once every week and this is your accounting data and you're writing to that database every single day, you're going to have a week's worth of work to redo if you recover. That's not a good situation to be in. So making sure you have good backups is critical. Something else that's critical is practicing your restoration procedures. Again, it's one thing to have good backups, but then it's another thing to know how to use it. Restoration procedures that are well documented and practiced will allow your IT administrators to restore systems in a much quicker fashion than they otherwise would be able to. It's the same principle for, why do schools have fire drills and some businesses have fire drills? Well, you want everybody to know what to do in case there's an emergency. This is the exact same principle. It's practicing the restoration of these procedures, of these systems, so that you can get them back online as quickly as possible. All right, so if you get it and it's on your network, my recommendation is always to isolate the problem as quickly as you can so it stops spreading through your network. So disconnect all those computers and servers from the network that you think are impacted. If you have cyber insurance, I would call them at that point and let them direct all further actions. That cyber insurance companies have all sorts of resources that they can marshal to your defense, including, if you actually have to pay the ransom, they can negotiate with the ransomware folks. They have the Bitcoin to pay the ransomware or whatever other cryptocurrency they may demand payment in. They have breach experts, so essentially lawyers to help you navigate the legal risk and the legal liability that comes with one of these things. So call your cyber insurance provider and let them direct all further actions. And then if you don't have cyber insurance and you want to restore yourself, my recommendation is always to replace rather than repair, right? There's this, a lot of folks want to try to sanitize the existing equipment, or we'll just delete the ransomware files off of this computer and we'll think we're good. And the reality is that making sure you get everything is going to be very, very difficult. So I would always recommend to replace rather than repair. And that's ransomware in just a few minutes. Scott?
All right, thank you. All right, I know we're coming up on time, but there are just a couple more slides that I wanted to go through real quickly. Here, just with fraud prevention, you need to have a strong internal control framework, and you can't just think of your typical transactional or financial controls. You really got to look at controls throughout your entire organization. So you got your tone at the top, you have the financial controls, you need to have consideration your IT and anti-fraud controls, and then you need to make sure you're doing employee education on fraud risk and how to prevent or detect fraud. Code word, the next code word is number 7, and the code word is 780. Just quickly, I wanted to go through the COSO framework. This is a very widely used framework to look at internal controls. Public companies that are complying with Sarbanes-Oxley, they all utilize this. And mainly what I wanted to say is the main thing out of this is when you think about internal controls of your organization, you can't just look at the transactional controls like the bank reconciliation. You really need to look at it in this kind of 3D box that they have here, where you look at it and look at your internal control environment of the organization as a whole. And you need all these different components to really have a strong internal control environment. So you have to have that control environment, a strong control environment. That's the 10 at the top is management, the board, showing that they have ethics and pushing that down to the organization, that they value controls and ethical behavior. Then you have risk assessments. So you're essentially assessing where do the risks reside, not only from transactions, but from outside the organization of where the risks reside. And then, okay, what do we have as from controls to mitigate those risks? Then you have control activities, which is the actual transaction level controls that everybody thinks about when you talk about internal controls. And then you have the last two boxes being information and communication and monitoring, which for information communication, is the information getting to the right people in a timely manner, and is that information accurate? And then do you have a mechanism to monitor to make sure that your organization's controls are working properly? So you got to think of when you're trying to prevent fraud or detect fraud, you need to think about your internal control environment from this multifaceted area to make sure your internal controls are strong. When you're identifying risks, I think this slide, just one thing to think about, when we look at organizations and we're doing internal controls, one of the things we go through and talk with them is, they have pretty good controls over the main process, but where you see that bullet number 2, where we identify exceptions to the normal process, when we talk to an individual, and they show us how they do something, and you say, well, is this how you do it for everything? And they say, well, no, we have these other transactions. It might be a very small number of transactions that run through this other process, but that often is where the control weaknesses are and where someone can exploit those. So when you're thinking about your organization and whether or not, you think you have internal controls, think about these exceptions to the process, and could someone exploit that exception to the process to commit fraud? And so I'm not going to go through all these different slides, but we'll provide them to you. These are basically best practices that we see within organizations of different controls when we're going through. These are things you'll often see organizations have in these different areas. So you have the entity level best practices. We have things around month end close, accounts payable, cash disbursements, payroll, code word number 8, which is 902. And then I did want to go through, we also provide you some IT best practices. And then I wanted to go just quickly through this slide. And, Subhash talked about all the things that his organization, he can do from a data science perspective of detecting fraud. But, your organization can do things on their own to detect fraud as well. And, utilizing like products you probably have access to, such as Excel or Microsoft Access. But these are things that we'll often do just to, do sanity checks, whether there's maybe low-lying fruit or things you might be able to identify a fraud from. And so, your organization just using Excel could run duplicate payments. You can match your vendor master file to your employee master file to make sure there's not addresses that are the same. Summarizing payments by vendor, that's often, you could either find two things there, whether, there's purchasing power that you can get with a vendor that has a lot of payments made to it that maybe you didn't realize, or again, you might have some payments to an organization that's much higher than you would have anticipated, which again could lead to fraud. And then you can see some of the other things of looking for transactions that happen on nights or weekends, or is a certain employee having way more transactions recorded than you might think. So anyway, we'll provide this information, the slides we have to everyone, but did want to let you know that your organization, and these are things probably that would be good for you to do to help detect fraud, potential fraud within your organization. And with that, I think we are adjourned unless there are any questions that came through. All right, well, thank you.